Today, we're going to talk about the changes the government recently announced last week on the housing market. And there are some interesting and exciting news for homeowners and first-time buyers. So first things first, let's talk about some great news for first-time home buyers. The Canadian government is making home ownership more accessible through some positive changes, and that started just last week on April 16th. The amount that first-time home buyers can withdraw from their RSPs to buy a home has increased from $35,000 to $60,000, which is a significant boost to put as a down payment for first-time buyers, especially people who have saved a lot into their RSPs. And the $60,000 amount as a down payment, it takes into effect right away last week on April 16. The government said the change reflects the reality that the size of a down payment and the amount of time needed to save up for a home are much larger than they used to be. The other big change is that first-time buyers purchasing newly built homes can extend their mortgage amortization periods up to 30 years instead of 25 years on insured mortgages. Under the current rules, if a down payment is less than 20% of the home price, the longest affordable amortization, which is the length of time a homeowner has to repay their mortgage, is 25 years. By extending the amortization to 30 years, this means lower monthly mortgage payments, which will be more affordable on a monthly budget. For young Canadians to own their first home, this is really great. This will take in effect on August 1st this year. But wait, there's more. Some advocates argue that more needs to be done to address housing affordability, particularly in high-demand areas like the GTA. They suggest expanding the 30-year amortization to all homes, regardless of whether it's a new build or a pre-existing home, instead of limiting to only new build. And I agree completely. If you're a first-time home buyer, new build townhouse and new build detached house is too expensive for most first-time buyers, especially in high-demand areas like Mississauga and the Greater Toronto area. So this would limit you to mainly new build high-rise condos. In our areas, new build houses are priced at more than $1 million, which typically means buyers have to take uninsured mortgages. So then this 30-year amortization doesn't even apply. My personal perspective is I would like to see that they expanded this 30-year amortization to resale homes. It would make it much easier for you as a first-time buyer to have more options, and perhaps for you to be able to buy a townhouse or semi-detached instead of only limited to condos. So how might these changes impact the housing market and the broader economy? These policy changes aim to make monthly mortgage payments a bit lower and more manageable for first-time homebuyers, potentially easing pressure on the rental market as more people can buy instead of renting. The Canadian Home Builders Association views these announcements as a game changer for construction and new housing starts, anticipating a boost in new home construction and economic activity. If you like this video, subscribe to our channel and follow us on social media to stay informed about the housing market in Mississauga and the Greater Toronto area. Now let's talk about interest rates. Cue the dramatic music. The Bank of Canada has announced this week to maintain its interest rate at 5%, which has remained unchanged for the past 8 months. But it looks like rate cuts may be coming very soon, possibly in June. 65% of Canadians are waiting for interest rate drops. It's true with lower rates, it may be easier to qualify for a mortgage and have lower payments. But there's a high likelihood that with lower interest rates, house prices will go up again due to more demand. There's a lot of pent-up demand in our real estate market. Many people have put on hold their plans to move. So as soon as the Bank of Canada is going to announce rate cuts, a lot of people will get off the sidelines, and this will likely start a buying frenzy with multiple offers. We're already starting to see this happening in most major areas in Mississauga, Milton, the GTA, especially in great neighborhoods with homes that show really nicely under $1 million and detached homes under $1.5 million. In fact, CMHC came out with a recent report that by 2026, house prices will be higher than during the peak market of February-March 2022. Imagine that. My advice still remains the same. If you're financially ready and you're you have savings for a down payment, and you can afford the monthly budget, you should plan to buy now during this year. And be prepared for lower interest rates and higher house prices in the next 8 to 12 months. And there you have it. This concludes our exciting news for first-time home buyers to potential interest rate cuts. There is a lot to keep an eye on in this dynamic and fluctuating market. But one thing is for sure, staying informed and up to date on the latest developments is crucial to making sound financial decisions. I hope you found this information helpful. Remember, it's important to stay informed and make decisions based on your own unique circumstances. So please like and drop a comment below on what you'd like to see from us next. Also, check out my video, How to Buy a Home in 2024, to help you navigate your journey in the next few months. Feel free to give me a call or text my number below. I'd love to have a conversation with you and happy to help.